Morning folks, how about a quick 2-minute update on energies? Let's look at uranium, natural gas and oil. Literal 2-minute update, just to keep you in the loop. So let's start from the left to right. Uranium, I'm still looking to buy on dips. So basically I'm bullish on uranium, bullish on natural gas, bearish on oil. That's the general thesis so far. So here's uranium on the weekly chart. Let's see if we can do this in 40 seconds. There's the previous range top. We've broken out of there 3 times already. Let me draw a line across there. I'm going to draw in a rectangle because we're sort of still stuck in there. And that yellow zone is the area we've got to get through. I think we need a bit of a pullback. This is the weekly chart. We're well above the 200 period moving average and the 20 and the 50 and so on. So we can zoom into the day chart to see if we can determine a level at which to buy. Very quickly, I'm going to put a Fibonacci retracement study in from the bottom to the top. Noting that the 38.2% Fibonacci retracement is at 29.6. The 50% retracement level, the best level to rebuy at, 28.4. I like 28.4 because we've got some range bottoms here and a bit of gapping around that area, so I'm going to draw a line in there too. So I'm going to put another range block in this region here to remind me that if we get down to that price, that'll be the area to look to buy at. So we've got 2 potential buying levels here at 29.7 and then back down here into this yellow block around the 200 period moving average and the other ones. That's URA, similar idea on UEC, the other uranium instrument we trade. I'll be looking for pullbacks down towards the 200 period moving average and the top of this channel breakout. Once again, I can draw a Fibonacci retracement study on here, bottom to the top. 38.2% is around about the 6.9 level, 50% is around about the 6.4 level. In the extreme, and I think this might look even better down at about 5.86, and that's the 618 Fibonacci retracement level. It's also where the 100-day moving average is. Right, let's move on. Natural gas I covered in yesterday's video extensively. I'll link that at the end of this one. And once again, I think we may have to pull back into 2.5 or 2.25. This contract rolls over tomorrow and we move from the November contract to the December contract with about a 53-cent contango. That'll put us up into this region here, but you can see the current contract is moving down as expected. And I think when we roll over, we'll roll over underneath $3. Check out yesterday's video. It goes into a lot more detail. But so far, it's just doing exactly what I thought it would be. Slight pullback. When we roll over tomorrow, probably at around 295 to 292. And then we'll see what happens from there. Crude oil. You can see both Brent crude over here. Big gap down on the weekend. WTI, same thing. Big gap down over the weekend. We're still short. We've got good profit on our short positions. I'm looking for WTI to move down now from the mid to high 60s to the mid to low 60s and then break below 60 into the high 50s. So that's energies including uranium, which is a metal as well. And talking about metals, we're still long on Bitcoin, still long on platinum, and now we're looking at buying palladium too. We also have a short position on gold. You might think it's super weird being short on gold but long on platinum and palladium, but it's a kind of a hedge, and that's what the chart's showing us, and it's working out pretty well so far. If you enjoyed this video, I'd love your thumbs up and subscription. I'll see you in tomorrow's video. Take care.
Not gas kings, we trade for grace. We'll make the smile lights up the place.